Hello, Facebook world. Happy Sunday. Give it just a minute for Facebook to find me some peeps. As they would say, they are building me an audience. So we'll give it just a second. Mr. Carr, how are you? I can always count on you. I appreciate it very much. Matt, hello. Hello, wife. How was everyone's weekend so far? Everyone having a good weekend so far? I can't believe this weather for October. It's crazy. Almost November, and yesterday was what, 80 degrees? Matt, that would be good, but I'm still not old enough. I think you have to be, was it 36, I think, to be president of the United States? Is that right? I don't know. I'm just going off my history, my memory from history classes in like 8th grade. Yes. Yes, we did have the class reunion. 2006. Woo woo. It was awesome. The 2006 class reunion. Got to give a shout out to Kaylee for putting that together. I don't even think she's on yet, but maybe she'll watch the video here in a second. But there was a lot of good peeps last night. It was a really good time. A lot of fun. We do need it to cool down, Darren. It's been warm out. I went bow hunting a couple times, and it's been pretty dang warm out to be bow hunting. So I wouldn't mind it to cool down a little bit. Hello, Mom. Mr. Luke Jones, how are ya? I try not to give away my age too often, Darren. But yes, 2006. It was my 10-year class reunion this weekend. So we'll give it just a couple more minutes. Heather, hey, how are you this weekend? Yeah, please feel free to, if you think I'm worth a like, give me a like. If you think I'm worth a share, give me a share. I appreciate everything. But we'll go ahead and get started. I'm not going to take up too much of your all's time tonight. Mr. Fry, hello. As you all know, my name's Michael Weaver. I've been a State Farm agent now. We've owned our own business now for almost 3 years. Been with State Farm for 6. I have a business degree from Baker University. I also have a retirement income certified professionals degree from the American College. I was a top 60 investment agent last year with State Farm, and I'm on pace to do the same, if not better, this year. So I think I like to just tell you all that just to help with credibility. Tonight, what we're going to be talking about is the interest rate environment and the election. I'm not talking politics, so hopefully no one joined the live feed to talk politics, because I'm not talking politics. I'm not even really going to talk politically about the election. Our weekend was great, Heather. Thank you. Busy as well. Tonight, what I am going to be talking about is the interest rate environment post-election, regardless of who wins presidency. So regardless if Hillary wins, regardless if Trump wins, or I know I have some independent hopefuls out there, maybe Gary Johnson makes a run. Regardless of who wins, a lot of financial experts are all predicting the same thing post-election cycle. So with that being said, if anyone has questions during when I'm talking, please feel free to ask away. I love interaction. If you think I deserve a like, please give me a like. If you just think this is worth sharing, please share. I appreciate you all very much for even taking time out of your day to listen and watch and join with me tonight. So I appreciate it. So first, let's talk mortgages. And like I said, I just want to put this out there. This is all just speculation from articles I've been reading from other financial experts, bankers I've been talking to from different banks with the mortgage, anyways. So this is all speculation, opinions. Who knows who's going to be right? Who knows who's going to be wrong? But I think it's at least a topic worth talking about. So, from a mortgage standpoint, a lot of financial experts, a lot of bankers that I have personally talked to, I've talked to 4 different bankers, all from different banks, and they're all predicting the same thing. And honestly, in the mortgage environment, I've already started to see this. They're predicting that interest rates are going to increase a little bit, definitely post-election and even into 2017. So the reason I am bringing that up to you all is because right now, especially in the Kansas City area, the housing market is super inflated, which are great for appraisal prices. And I never do these live feeds to ever try and solicit business or anything like that. But this is one worth talking about. If you've thought about refinancing your home, if you've thought about getting a home equity line of credit, now may be a decent time to lock in a good interest rate before the election takes place. Just with what they're predicting, with what people are saying, with what 2017, what experts are predicting in 2017, we're more than likely going to see interest rates start to incline in the mortgage rate and mortgage environment. So I thought that was just something I was going to touch base on tonight. Tell as many people as I can. So please share with family, friends. If you're considering refinancing, regardless if you would just need a lower interest rate, regardless if you would like to take some cash out, regardless if maybe you need to consolidate some debt. Those are all great avenues, and now is a good time because interest rates are still fairly low. I mean, most interest rates on your mortgages are down in the 3% range, and those are for fixed loans. So think about checking it out if that's something you're looking at before the election. So let's get into the fixed investment interest rate market. So fixed investment rates. So you're talking guaranteed products here. So CDs, checking accounts, or not checking, savings accounts, basically any account that guarantees you an interest rate return on your money is a fixed investment rate. Right now, on savings accounts, probably 0.06%. That's a lot on your money. You're making a lot. I say that jokingly. CDs, you have to lock up your money for 5 years to get 1.5%, 2% guaranteed interest rate, whatever it may be at the time of the market. So right now, fixed investment rates just are not good. And what a lot of people are predicting, a lot of financial experts, analysts within the industry, they're saying that the fixed interest rate market is probably going to continue to decline into 2017. So there could be a lot of factors in that. And like I said, this is all speculation and opinion. But I would tell you, don't look for fixed rates to increase anytime soon. They've even talked about, I've even read some articles with experts talking about a negative interest rate environment. Now, most of you probably don't even know what a negative interest rate environment is. A negative interest rate environment is just like it sounds. You have a negative interest rate environment is basically you have to pay a bank to hold on to your money. It's crazy. There's a lot of countries out there outside of the U.S. that actually have negative interest rate environments. So when talking about globalization, that's when this topic usually gets brought up. But I don't think we're anywhere close to negative interest rate environment of even going there yet. But it's still an interesting topic, to say the least, to think about you may actually have to pay people to hold on to your money. I'm not predicting that. I'm not saying that's going to happen in 2017, but the whole point of bringing that up is to say that probably don't get your hopes up in 2017 for CDs or savings accounts to be earning any type of great interest anytime soon. So, thank you guys for joining. I mean, I see Derek Wiesman, Carrie, Michelle, Bill England, Chris Downing. Thank you guys for coming on. I appreciate you all very much. If you have any questions at all while I'm talking, please feel free to ask. I love interaction. I love answering questions if I can. The next topic I was going to talk about is probably the last topic for the night. Oh, Bill, I hope that's not right. But a lot of people are predicting it, which is it's crazy to think about. We've been very fortunate in the United States to always have booming interest rates. Even now, I mean, the interest rate market is low right now, but at least it's not negative. So to even think that it may be almost a negative 1% by 2018 is hard to even swallow. I mean, it's a crazy to even think about, more or less talk about. So I hope that's not the case. I hope for our sake that is definitely not the case. So let's go to the stock market. Stock market's interesting. The stock market is very volatile. So I always tell people the stock market is not risky, but it is very, very volatile. So you're going to have the ups and downs within the stock market. It tends to get a little bit more volatile as we get closer to the election and directly after the election. So post-election, and this is just going off some things I've read. Who knows if they're right or wrong? But back in 2012, the market dipped by 500 points, and in 2008, the market dipped by 1,000 points. So that's something that I do want to bring to your attention. I am not someone that ever advises anyone to try and time the market, because timing the market it's impossible. If people could time the market, they'd be very rich. I'd be a very wealthy individual if I could time the market. You just can't do it. So the only reason I tell you that is if you are 5 years in, basically pre-retirement, or 5 years post-retirement, this is where this topic is probably most important to you. Just make sure you're adequately allocated. Make sure that your asset allocation is right for your age, for your investment style. But a lot of people are predicting that the stock market is going to go down post-election. Now, regardless if it's actually due to the election, who knows? We've been on an increase in the stock market for a long time now. I mean, 2008 was a really bad year. And ever since 2008, we've been going up. And no, that's not because of the current administration or anything of that nature. Some people think that politics have to do with the stock market. That's just not it at all, quite frankly. If you look at the history of the market, it's always trending up regardless of who's in office. But it can be volatile at times. So we've been going up for so long. Just look for it to come down in the near future is what a lot of experts are predicting. Let's hope they're wrong. I'd like for everyone to keep making some money. Hopefully when we do have the down year, hopefully it's not that far down and we take off again. That would be awesome. So, let's see. Ray, what's up, my man? I think it could cause stock fall. Everyone will hold their money if they do that. Yeah, that could be the case too, Bill. I don't know. It's definitely interesting when you think about the negative interest rate environment. But I mean, that's where people are going to have to make their money. I mean, if guaranteed rates are in negative, you're going to want to put your money in the market to hopefully make some money. So it could actually help the market. Those were really the three things that I was going to talk about tonight. So, again, not all of you have watched all of this, so I'll just recap real fast. So, mortgages. Financial experts are predicting that the mortgage rate environment will be increasing. So if you're considering refinancing, doing a home equity line of credit, right now is a great time to get in a low fixed interest rate. They're saying even through 2017, mortgage rates are probably going to increase. This is all speculation, all opinion. Who knows what will really happen? Hopefully mortgage rates continue to stay low, down in the 3s and the 2s. You have fixed rates. So you're talking your CD products, your guaranteed type of investment products. Look for those guarantees, those interest rates to continue to decline. We're just not, the interest rate environment's just not good right now when talking about fixed guaranteed products as far as an investment standpoint. And then look for the stock market to be volatile around the election. And post-election especially. With the past 2 elections that have taken place, the market has dipped. So just keep that in mind. But that's all I really had tonight. I don't want to take up a ton of your all's time. I know, and I definitely did not want to talk politics. I just added the word election in there, hoping I'd get a couple more peeps to watch, thinking I was going to be talking politics, and that's just not the case. So does anyone have any questions? Thank you, Mom. Any questions at all? It doesn't even have to be about the interest rate environment. So anything at all. If not, I will be wrapping this bad boy up. Alright, I got a heart, that's good. Got a couple likes. So, well, if there's no questions, Sunday Night Football is going to be coming on pretty soon. I've actually got to head up to the office to do a little work real fast tonight. So, I'm not going to keep you guys. Thanks, Bill. I appreciate it. Thank you, Chad. Fernando, my man. I don't know who just gave me the crying face. But hopefully you're sad because I'm getting off. So, with that being said, thank you guys for watching. Please think about watching us, me and my wife, Courtney, Wednesday night at 7 o'clock for Weaver Wednesdays. I think this week's topic is going to be pretty good. We may nerd out a little bit, but it's going to be pretty good. So thank you guys again. Hopefully you had a great weekend. Have a fabulous week, a fantastic Monday, and take care.